Okay, so today's webinar will be focusing on support and resistance levels, mainly pullbacks, overlaps, as well as swings. So without further ado, let's go ahead and get started. Okay, so hi everyone. Let me just do an introduction first. So I'm Melanie. I'll be doing the webinar with you today, obviously. And here's our team of analysts. So we have Desmond, who is our chief trader as well as the CEO of our company, Everest Fortune Group, finalist for Best FX Research in the years 2019, 2020, and 2021. So let's quickly get started. So here's our agenda for today. So firstly, we'll be going through swings for support and resistance levels, how to identify them, what to look out for. And then we'll be looking out for starting points for these levels. And then we'll be moving on to how to identify pullbacks as well as overlaps, followed by combining these two. And then we'll be looking at some examples on how to use support and resistance levels together with Fibonacci to make sure that your analysis is as accurate as possible. Hi Fada, hi Sasha, welcome. Okay, so let's get started. So using swings for support and resistance levels. So we're looking out for support and resistance levels. One very important factor that we can use is looking out for swing highs and swing lows. So support and resistance levels in trading refer to prices at which an asset's price tends to stop falling, which would be our support level, or stop rising, which would be our resistance. So in order to identify these levels, you can use technical analysis such as trend lines, moving averages, chart patterns. You can also look at previous highs and lows of the asset, which is what we'll be looking at today. You could also look at volume data to identify potential levels of support and resistance. So it's important to note that these levels are not absolute and can change over time. So it's important to continuously monitor your trades. Okay, so I've added an image here for you to see how we can use swing highs and lows as resistance and support levels, but we'll definitely go through more in depth in the next few slides. So take note of how the peaks that I've drawn here are very clear in the market structure in order to be used as resistance and support levels. Okay. So first, let's look at an incorrect example. So here's an example of insignificant swings, which are bad points to use for Fibonacci starting and ending points. These are also bad points to use if you're looking for support and resistance levels. Why? Because the price movements here are too small and there are no significant swing highs or lows. So here's another insignificant example for a insignificant swing. So there aren't really any clear swing highs or lows and price movement is very minimal. Okay, now let's look at some correct examples. So in this example, we can see very clear move up and down with very obvious peaks and troughs and clear market movements. So here's another example. We can see I've drawn out the peaks and the troughs to point out exactly how clear the market structure should be in order to be regarded as significant swing highs or lows that you can use for support and resistance levels or Fibonacci Fibonacci levels as well. Okay, so you can use it as take profit or target take profit or stop loss levels as well, but you should not use it if an entry has no other supporting arguments such as Fibonacci or other graphical levels to support your analysis. So why is this so? Because using a recent swing high or swing low is a weak level if it's the only level. So what should you look out for? You can look out for multiple swings. So if at least 2 swing highs or swing lows line up nicely, it's definitely much better to use. And you try to find areas where these might line up. So it doesn't have to be an exact level because most of the time it consolidates as an area rather than a level. So it's a good practice to see how far the resistance and support line can go. So it's okay to cut through small wicks since these are typically areas instead of specific levels, since as you can see in the GIF over here. So you want to pull it back as far as you possibly can without cutting through too many candlesticks, but the wicks are fine. Okay, we have a request for US oil. We'll definitely look at that if we still have time at the end of the webinar. But for today, we'll be mainly focusing on, because today's webinar is educational, so we'll mainly be focusing on support and resistance levels and how to identify them. Yep, so I'll get into what time frame to use in just a little bit. But for now, let's look at how to identify a starting point. So when picking your starting point of pivot or your entry, support resistance levels, these are the rules to look out for. So you want to first check if there's a swing high or low, or pullback or overlap level to start from. Then you want to go back as far as possible. And as I mentioned earlier, you want to intersect the wicks, which is more preferred compared to cutting candlesticks. So over here in the image, you can see an example. The orange thumbs represent an okay interception. So it's not preferred, but it's not exactly wrong. So preferably we want to look for intersections only of the wicks, as you can see from the green thumb over here. And we'll see more examples of this in the coming slides. Okay. Here we have our first red thumb over here, and you can see that our support level intersects multiple candlesticks, and that's why we should stay away from these type of starting points. Instead, we want to look for levels that have clean cuts of the wicks or just one body of a candlestick, so something like this or this. Here we have another example. So you would definitely want to avoid something over here, like the red area, because this cuts too many candlesticks. A few wicks of candlesticks are fine, but in this case, you can see that our support and resistance level is actually cutting the body of the candlestick. So you want to avoid this situation. Oop. Okay, now let's look at how to identify pullback and overlap levels. Okay, so let's start with a pullback support or resistance. So pullback support is a strong level of support. It breaks out from a previous resistance level and price is now dropping back to visit it again. So you can take a look at this GIF over here. Price has recently broken this swing low support, but you can see price is actually retracing it or pulling back to this level here. So an important tip to look out for is when a pullback support line lines up together with a Fibonacci level, it is quite an important support level, which means price is likely to pull back to that area. So you can see over here, our swing low support lines up together with a 38.2% Fibonacci retracement, as well as a 61.8% Fibonacci retracement. So this whole area is an important area to look out for, as price is likely, and you can see over here, to retrace and pull back to this area. Because of this confluence area, as we call it, price is likely to bounce off of it as well, which you can see is what happened in this clip here. I'll just let it replay so you can see what I'm talking about. And you want to take note of how we make sure that we are following market structure whenever we are putting a Fibonacci trend line. So you can see price actually reverses off this area very nicely. Okay, let's move on. If you guys have any questions at all, you can feel free to leave them in the chat, or you can send me a message on the Q&A section as well. Okay, so here's another pullback support example. At the red area, price tested this level 3 times with multiple swing highs, as you can see 1, 2, and 3. Multiple swing highs with one another at this resistance level. So once price breaks the red area, which you can see here, it passed through the red area, it now becomes a pullback support level. Once it becomes this pullback support level, we are expecting price to retrace or pull back to this same level, as you can see from the green arrows. Okay, similarly in this example, we see price tested this green area 3 times with swing lows in line with one another. So instead, this is a support level. Now, since price has broken this support level, it's now a pullback resistance, and we expect price to retrace or pull back to the same support level, as you can see from the red dotted arrows. Oh yes, time frame. Okay, so we typically like to use either the 1 hour or 4 hour time frame. We want to avoid the 15-minute or 30-minute time frames because there tends to be a lot of noise for those time frames. But like I said earlier, the most important thing is to look out for a very clear market structure, like you can see here. So if on the 1 hour time frame, you can't really get a very clear market structure, you can definitely change the time frame to maybe like a 4 hour time frame or the daily time frame, just to make sure that you get a really clear and a really nice price structure before you start your analysis. And that's so that you can get as clear swing highs as well as support resistance levels and all of that. So it's important to start on a really nice, clear market structure. Okay, let's look at one more example here. So here we have a significant swing low, and we can see price surpassed this swing low support level. So it now becomes a pullback resistance. And we expect price to pull back or retrace back to this level, which it did over here. But once it touches this level, it's now a overlap resistance level. Okay, so now let's get into overlap. So an overlap resistance or support level occurs when price reacts off a particular level from the top and from the bottom. So the more times it reacts off this area, the stronger the overlap area. So this means that there are bulls and bears respecting that area, so it's an important point to take note of. So you can see over here from this GIF, you can see a swing low here as well as a swing high that lines in line nicely together with this this area and this level. So since price retraced back to this area after pulling back, it's now an overlap resistance. And we can see price actually tested this level multiple times. So similarly with the previous support, pullback support, if it lines up together with other elements such as your Fibonacci or your other graphical elements, then it makes your analysis even more accurate. Okay, so let's look at an example. So over here, the swing low support becomes a pullback resistance once price breaks the support at 105.643. So you can see the blue area, once it passes through, it becomes a pullback resistance. Here we can see how price retraced or rather pulled back to this same area. And once it reverses off of this circle, it is now an overlap resistance. Okay, are there any questions so far? Okay. All good. Let's continue. So next, we're going to be looking at how to combine our pullback and overlap levels to make our analysis as accurate as possible. So here we have a big swing high resistance level over here. And then we can see from this area, price surpasses this swing high resistance level, and then it now becomes a pullback support. Okay, so the difference between a pullback and an overlap. So if you look over here, the pullback support occurs when it surpasses the level. So once it surpasses this level, it's not yet an overlap. It's purely a pullback. So we call it pullback because we are expecting it to retrace or pull back to this level. So only when price has bounced off or reversed off of the same level, then it becomes an overlap support. Overlap in the sense that a swing high overlaps with a swing low at the same level. I hope that makes sense. I think this is a pretty clear example. So you can just either take a screenshot of it. Okay. So yeah, so once it reverses off of this level, it is now an overlap support. So let's look at another example. So here we have two swing highs that lie in the same level at 0.68745. So since there's multiple swing high resistance, we can say this is a pretty important resistance level. Now price surpasses this level and it's now a pullback support. From the blue circles, you can see price has pulled back to our support and it's actually bounced off of it twice. Once it bounces off of this support level, it now becomes an overlap support. Okay. We have one more example, and then I think we can see how this plays out on a chart. So over here, we have multiple swing low support again, with two swing lows lining up at the 33420 level. Once price surpasses this level at the pullback resistance, we can expect it to pull back to the same level or retrace back to the same level. Point number 3, now that we see price has reversed off of this level, it is now an overlap resistance. So you can see price has tested this level 3 times before pulling back at this blue highlighted area, and it now becomes a pullback support again. So we can see this 33420 area is a very significant area because price has tested this area multiple times. And it also overlaps with both the bulls and the bears. Okay. Okay, so that brings us, what's the main difference between a pullback support and an overlap support? So pullback occurs before, so this blue highlighted area, for example, is a pullback resistance. Only when it reverses off of the level, then it is an overlap. So how do you use the combination of pullbacks and overlaps to decide when to enter the market? So the combination of pullbacks and overlaps is more to identify a significant level. So let me try and find an example on TradingView. Overlap equals to breakout. Overlap actually perhaps I won't say breakout. Overlap more implies the fact that price is going to reverse off of that same level another time. So for pullback, once you've identified the pullback, you can kind of predict that there is going to be an overlap happening next. Okay, let me see if I can find one on oil since someone requested that earlier. Just give me a second while I pull up TradingView. Overlap equals to support becomes resistance. Actually, that's pullback. So as you can see over here from this example, point number 1. Let's focus on point number 1. So from the multiple swing lows, we know this is a support, right? Because price has bounced off of this area twice. So once price has surpassed this level at the blue highlighted area, it now becomes point number 2, a pullback resistance. as opposed to a support. Overlap actually is simply that a swing low and a swing high are in line with each other. So confluence of resistance and support, actually yes, in a way you could say that, yes. Okay, let me just pull up the oil charts to see if we can find any support and resistance levels there. Okay, can you guys see my charts? Okay, great. So let's start with maybe the weekly time frame, just to get a rough gauge of where price is heading. So we can see here price is moving below the Ichimoku cloud. So it gives us, and it's also moving downwards. So we have a bearish view on the weekly time frame. Now let's look at the daily time frame. Okay, we also have a bearish view. Now 4 hours. Now on 4 hours, we can see price has recently bounced off of this support area at 73.15. Now, like I mentioned earlier, we want to see if we can pull it back as far as possible. So I can pull it back here. So I have two swing lows in line with one another. Okay, that's about it. So now let's look for more support and resistance levels. So here I have a swing high that's together with in line with another swing high. Okay, I'm trying to find an example where there is an overlap. Okay, let's take a look over here. Okay, so here, price has recently bounced off of this swing low support, right? And it's also surpassed this area here. So it's surpassed this level, this swing low support, and it is now a pullback resistance. Okay. So now that it's a pullback resistance, we call it pullback because we are expecting price to retrace and go back to this level of support, which is now a level of resistance because we're expecting it to bounce off. Okay, so let's see how this plays out. So we can see price has reversed off of this level, right? So once it reverses off, it's now an overlap. Okay, I hope that clears things up a little bit. So basically, when a swing low lines up with a swing high, that's an overlap. Okay, any questions? Okay, Since we're here, I'm just gonna continue analyzing this chart. Okay, so we have a multiple swing low support here. And over here, because price has not pulled back to this level yet, right? So we can see price has pulled back. It has surpassed this level, but it has not gone up here and reversed off yet, or it might not. So because it hasn't, this is still a pullback. Okay. Go ahead and let me know if you still have any doubts or any questions, and I will repeat again. Okay, but let's go ahead and analyze this chart. So here I have a retracement. So I'm putting a multiple swing high resistance over here. So we can see there have been 1, 2, and 3 significant swing highs. Three significant swing highs at this level. So this makes it a significant resistance level. Okay, now let's move on. So here I can see my 50% lines up with this pullback resistance level. So I'm going to remove the others. So you don't use Ichimoku cloud for the line? No, I don't. Let me just hide this. So the Ichimoku cloud or other indicators, we typically will use it after we've done our graphical analysis so that we can see whether it supports on analysis or not. And I'll show you what I mean in a little bit. So first things first, we identify the general trend. So we've identified that it's on the other time frames, it is a downtrend. But in this case, we can see price has recently bounced off of this level. Okay. So now that we have our general trend, now we plan out our support and resistance levels, which we've done over here. Okay. Next, we pull out our Fibonacci levels. So we see whether any levels line up with each other. Here, our 50% retracement lines up nicely with this pullback resistance level at 78.1. Okay. Let me just see if there are any other questions. Okay, I'm gonna label it so it's clearer to see. Second resistance, first resistance, and support. Okay, so now that we have our Fibonacci levels, support and resistance levels, then we pull out our indicators. So Jonathan, you mentioned Ichimoku. So I'm gonna use Ichimoku. And this is one of the indicators that I like to use as well, because at first glance, you can see immediately whether it supports your bullish or your bearish bias. So in this case, since price is moving below the Ichimoku cloud, it is a bearish signal. Next, I like to pull out MACD. Okay, here we have a little bit of a conflict. So we can see MACD has a little bit of a green area. So it does not support our bearish bias. It's giving us a bullish signal. Okay. Who requested for the US oil? Let me just check. So for that, could you tell me, did you buy or did you sell for the US oil? Sell, yeah. So because on the previous time frames as well, we said earlier that it gives us a bearish view because downtrend, and then on the daily time frame as a downtrend as well. So in this case, oops, on the 4-hour, we can also see that there is a downtrend. So once price passes this level, we can expect price to hit our second support level at this swing low support. Okay. Are there any questions? Okay, I just realized that our second resistance can also be pulled back all the way to here. So this is another example of an overlap resistance. And let me explain. So let's start from here. Okay, we have a swing low support, right? Swing low support, and then price bounced off of this area. After that, it surpassed the level. So once it surpasses this level, it is now a pullback. Okay. Okay. So now it's a pullback resistance. Okay. And then if we follow price closely, we see it actually retraced or pulled back to the second resistance here. Just as we expected. So once it bounces off this area, which is what it did, this now becomes an overlap resistance. Okay, and we can see after this overlap resistance, price continued and then it actually retested this area over here, but it did not surpass it, so it's still an overlap resistance. Okay, I hope that makes things clearer for everyone. Let me know if you have any other questions or it's still not clear. The second support is determined by Fibonacci. Okay, let me zoom in here. The second support here, determined by Fibonacci. Actually, The second support here, I placed it here purely from this swing low over here. So I didn't use any Fibonacci to support it. And why? Because price is still currently over here. So it will only reach this second support once it breaks this first support. So I would wait for price to break through the first support before going in for a sell towards the second. Okay. I hope that makes things clearer. Okay, Sasha, what are you not fully clear about? Which part? For the pullback or for the overlap? Or for both? If you go enter the market at 14th December. Okay, let me replay to 14th November. Let me clear all this. Okay. So you're asking if you enter the market at 14th November, how would you know that it reaches the second support? Okay. Well, our second support is actually here, right? So it's like it's a month before it reaches our second support. So if you're asking how would you know that it is going to go lower, I would say, okay, we will let price break through our resistance over here first. Because we already know there is a support level over here from the swing low. So how do we know it's going to go lower? We will have to wait for price to break through this swing low support first, right? And then once it's our pullback resistance, once price has broken through this level, then we can expect price to either pull back to this level or continue to go down, right? So let's look at how price played out. So we see it tried to retest this level, right? But then it actually bounced off. So you made a lower low. And then we see here, price again tested this level, making it an overlap. Once it's bounced off here, then we can expect it to go lower. Okay, let me see if I can find any Fibonacci to support that. Let me see. Determined by Fibonacci. Okay, so over here I can see there is a Nike tick here. So maybe here. So for Nike tick, that's what we call a Fibonacci extension. Okay, so we make use of the hundreds, right? So once price has made a 100% retracement from this Nike tick here. Let me just draw it out. So it's like this. It's an inverted Nike tick. So Nike tick would be like that. An inverted one would be like that, which we have here. Right? So our 127.2%, we can see that it lines up nicely with our second support here. So we can expect price to hit this level, this 127.2 level, if that's what you're asking, Jonathan. Yeah. So then it will hit this level, as you can see here, and then it will reverse off. And that's how our second support came about. Okay, I hope that answers your question. Okay. Pullback. Okay, so let me go back to my slides. I think it's clearer on the slides. Okay. So if we look at this, there's two swing lows here, which makes it a swing low support. So support is when price has bounced off of the level before. Okay, so it's only a pullback after price has surpassed the level. So pullback just purely means that you're expecting price to retrace the same level, but it has not done so yet. Okay. Okay, no worries. I hope that makes things clearer. Does anybody else have any other questions? We have a couple more minutes left. Okay, if not, maybe I'll go through our charts again and see if I can find more real life examples from here. Okay, no questions. Let me just check the chat and the Q&A section. Okay, if there's no other questions, yeah, no other questions, then you guys can take your leave. Thank you guys so much for joining me for today's session. I hope you guys learned something. And I will see you guys next week. So this was our support and resistance first part of 2. So in the second part, we'll be looking more at combining Fibonacci's together with support and resistance levels. We'll be looking at more confluence areas as well. So, and more examples as well. So stay tuned for that. Thank you guys so much for joining and have a great rest of your day. I'll definitely stay behind for a while to answer some questions. What happened with yesterday's webinar? Yesterday's webinar, I'm not entirely sure. Could you tell me what you couldn't sign in, or? Thanks everyone. Thanks Shobu. Thanks Jonathan. Thanks Fada. Thanks Bulo. Yes, we do have webinars on Ichimoku, so you can go ahead and sign up for that. I'm not so sure if the schedule is out yet. So you can look out for that. Should be on the Vantage page. Thank you, Shirley. You register and get reminders, but nothing starts. I'm gonna have to check on that for you, because I'm not too sure as well. Did you join the session like yesterday as well? I mean, join the session like you did today? Thanks, Anne-Marie. Thank you, Annalyn. Okay, I'm not too sure, Meg. I'm so sorry about that. Maybe you could email Vantage to let them know. Okay, no worries. Thank you guys so much. See you guys soon. Bye.